Good afternoon and welcome everyone to this live broadcast with Zinzino. And my name is Niklas Elmhammer and I'm an equity analyst at Carlsquare. And I'm very pleased to be joined today by Dag Pettersen, CEO at Zinzino. And the live chat is open, so please submit as many questions as you like. And I will bring them up during the session. But first, welcome, Dag. Very happy to have you here with us.
Thank you. It's a pleasure being here with you guys.
Yesterday, you released the Q4 report. So I would like to start by asking you to help us walk through the highlights of the recent quarter and the past year. Please.
Thank you for that. Well, you've read the report, and the report is out. We are very pleased with the trend of the growth of the company, and we are pleased with, I would say, the acquisition and merger of Zurvita. So that was a big thing for us, even though it was announced in December and was finally kind of put together here in February. All in all, I'm very pleased with everything. There is a couple of things we can always improve on, but I guess we're going to talk about that.
Okay, great. We saw some strong accelerating growth in Q4. It exceeded at least my expectations, and apparently most of the other investors as well. So please, could you elaborate what are the main drivers behind this strong growth?
So it's a very broad question, but so I think for the first thing, one of the biggest highlights when I'm analyzing the numbers myself is that I see that most market is actually growing. We don't have any problem market that is declining, so that's one thing. We have a strong foundation in the Nordics. So even though the Nordics is not growing super fast, if you look at market share, if you look at how we're analyzing the data of the test, if you bring that kind of revenue in the Nordics and you apply them to what the potential of the business could be in those larger markets, we have not started yet. So what you can see is that we have a good growth in many markets, many regions of the markets, and the DACH region with Germany and Austria and Switzerland is kind of the main driver now. It's about 28-29% of the business. If you look at US, it's a hyper growth market where the potential for us to grow even more is, it could be going on in the same path for the next decades, to put it like that. So we have been doing the same thing the last decade. We have been working on improving ourselves, adding new products, adding new markets, investing heavily in technology and digital transformation. So we have done most of the same things. It's just that we got a little bit better traction now when we are growing. So it's a spiral effect somehow of all the things that we have done over the last years, on top of a big health trend. So the pandemic learned us a couple of things. I'm not sure if you are aware of that, but I'm not sure if you care too much about your D vitamin levels before the pandemic, but during the pandemic, you understood that mattered. So the awareness of preventative health is a growing trend all across the world. And you can see that in different reports. McKinsey have coming out with 2-3 reports. And we can see that the awareness of that is, we are benefiting from that, of course, on top of all the things that I mentioned that we are doing.
Okay, very, very interesting trend. And looking at 2025, you have in January you reported a sales growth of 57%. So again, what are the drivers now? Is it the same drivers, or are there any new factors coming in?
More of the same, I would say, but we have a couple of growing markets. Like US is growing faster organically than the regular ones that we are normally having, but we're still steady growing in Germany and in Austria and Switzerland. General good growth in many markets, on top of a couple of new markets that have been growing last year, like Taiwan and India. Huge markets that we have invested in those markets over the last 3 to 5 years, but the traction is coming now, more and less. Then Mexico is also doing pretty well. So all in all, the trend is our friend. So I kind of sense the next question would be, well, Dag, you were saying that you're going to grow more than 20%. Isn't that a little bit strange when you're growing faster now? So that could be one of those questions that you could ask me, I guess.
Okay, so why you're setting the target for 20% when you're apparently growing much faster
we
now?
are yeah. The question, I knew it came, or I knew it was going to come. So we were debating this honestly here the other day. Are we going to shift our kind of trends? Because what our financial kind of outlooks has not been changed. We started to present that outlook a year ago, and we said the following, and it's that we are going to at least grow 20% per year over the next 3 years. We said that. Last year, we ended up on 25. So, and then, yeah, we are keeping our truth. If we are growing more than 20, that could be 30, that could be 25, that could be 35. But over the next 3 years, what we would like to accomplish, and we would like to exceed even, would be that we are continuously growing with 20%. So if you take 20% for the revenue that we had last year, and you add 20% the next year, 2026 and 2027, that's what we promised the market. My hope is to exceed that. We are saying at least 20% year by year by year.
Got it. So on the subject of growth, you recently announced the acquisition of US company Zurvita.
Yeah.
So it's been kind of quite a drawn-out process, but on paper it looks like a good deal, and of course significant expansion in the US. But could you give us some background? This was a company that entered Chapter 11. Why was that? Could you give us some more color, please?
Yeah, I'll be totally transparent and open. So we actually signed an NDA quite a while ago, and I think we announced the kind of the letter of intention to do a merger in June last year. Then during that process, the liabilities in the company were a little bit on the high end. There was a couple of risks. US has different law system than in Europe, so the risks are a little bit different. I won't say it's higher, but it's different from how we evaluate things. And then this is a way to buy the assets and leave the liabilities behind of those we don't want to, meaning that we did a lot of changes in that Chapter 11. So we were financing the Chapter 11 process. The company were, I would say, underfunded, underfinanced. So they were in some kind of trouble. And that's why we ended up, after lots of due diligence, lots of discussions with lawyers and forward and backward, we ended up agreeing on doing a debt financing of the company, which means that we were supporting them through the Chapter 11. And When we are out of that situation now, we have already done the data transfer of all their partners and customers into our system. So a bullet point on that is scaling the business for us, which has been a plan that we have had for the last decade. So we started by acquiring bioactive foods 10 years ago. We acquired a factory 10 years ago. 6 years ago, we acquired an Asian operations. 3 years ago, we acquired a Swiss company, and last year we acquired one database and one company and half of a olive oil factory. So there's a part of an expansion plan to get the assets that we want and to also keep the growth. So back to Zurvita, we expect that this outcome of the whole transaction will be good. You never know when you enter these kind of acquisitions and mergers, but we have a good feeling that things will turn out well. We have been working closely together with the management and the owners of the company, and we have also reduced the cost dramatically in Zurvita by using our system and platform. And also a lot of employees are now joined us, but also 2/3 have left as a conclusion of we becoming the owner of the company, and we don't need all those staff since we have everything online, digital ourselves. So that is the fact.
Okay, great. So I'm an analyst, so I have to ask about sort of the profitability of Zurvita. Is it depressed now or is it already robust?
So if we were buying the company, then we would bought their P&L and their balance. But as I said, we are only buying the assets that we wanted to bring with us. That means that all the liabilities that they had, they're gone in the Chapter 11 process. So we're taking clean assets, which means the customers, the partners, their products, and their IP, and some employees that is joining us. So when you looked at the profitability or the output or the return on this investment, if we look into that, it's all depending on how well we are going to grow the business. But as you said, this seems to be a good investment for us, and we strongly believe it's going to be a good investment for us. But it has been a tough, I would say, process internally to deal with the US law and the Chapter 11, you can imagine.
Okay, yeah. Thanks for clarifying that. We have some question from the web regarding the gross margin, I believe. It's from Michael Chair in Denmark. So if more distributors rank up, will this decrease the gross margin because they get paid more percentage of the volume of sales?
So we have a model where we have all our independent partners are our sales force. So I guess we have 25,000 people all over across the world who is selling our products, some more, some less, some more active, some less active. So the way that we are paying them is based on commissions. So they need to sell stuff to get paid. That's the kind of the model of things. The short answer to that is that we are monitoring the commissions and the bonuses and the rewards that the partners and our independent partners are getting. I would say weekly and monthly, and it's an average of all that. So I would say no, it's not going to change too much. But of course, if we are not overlooking the benefits, the pricing, the rewards, and everything, and following it up weekly, then we might get higher costs of that. But it's the cost structure of Zinzino is depending on many different things. So I'm not worried about that.
So okay, but there was increased remuneration in the Q4. So
that's correct. And in whole 2024 compared to 2023. So what we did in 2023 was an extraordinary year where we have lower payout, I would say, in commission. What we really did was to change some of the elements, which you are seeing in 2024. But that is strategic choice and one of the reasons why you see the growth here. So we're paying out the right kind of rewards to our partners in Q4 and Q3. So if we are growing, everyone is pretty happy. So that's our aim, that we are going to grow fast and then reward our independent partners based on that.
Okay. But is it fair to assume that gross margins will bounce back from these levels?
I think that 2024 is more like a healthy breakage where we are paying a little bit more to our partners. The beauty is if we can get the scale. So if we can scale our business, then the general costs will be more in a way. So I think that, or I've said it before, when we are hitting 1 billion Swedish kronor in some years from now, then it's much easier to earn more money. So that's the plan. It's to grow the business, scale up, but not stopping the growth trend that we have by being too cheap on paying the independent partners. So I think that 2024 is going to be the normal. What it's going to be over the next years, I don't know. It's a little bit depending on how fast we're growing. But we do investments, so it's good. Also in sales and growth.
All right, perfect. Another question from the web is regarding new products. Collagen Boost seems like a successful product. Will it be available to all markets soon?
Yeah, we are working on getting it out to all the different markets. So we have, I would say that it's sold extremely well. So we have had a shortage of the product. So from next week in beginning of March, we are kind of finally we have a warehouse situation where everyone can get as much as they want. So that has delayed the I would say the eagerness to get it out to the Asian markets, for instance, and to Mexico. Some of these markets have different regulations. So it takes a little bit time to get it in with customs. Europe in one way are easy because the regulations is more or less the same. So it works. And so the next markets that will get it will be over in Asia and Mexico and finally Canada as well. But when you are talking about new products, we acquired a company last year. I'm just handing up one of those products. It's an amazing product. We're gonna launch that product. It's spirulina product. We also have one product that comes in because of Zurvita's deal. It's launched now in US and later on we're probably going to launch that in Europe and in Asia later on this year. And we're working on a couple of super exciting things. As you probably know, we are a test-based nutrition company with the largest database of fatty acids and tests. So we are working on expanding the field of new tests so everyone could monitorize their own health and being more preventative in their own health. So that's going to be super exciting over the next upcoming year.
Great. I think, unfortunately, we are running out of time. So thanks, everybody, for listening in. And especially thank you, Dag, for terrific answers. It's always...
Thank you for having me. Thank you for having me. It's always a pleasure to be here with you guys.
It's always great to hear to learn more about your amazing growth story. So thanks, everyone, and have a great weekend.